In this video, I am sharing 7 things you may not realize about taxes when you are starting your nonprofit. This is an important topic because if you have a better understanding about taxes, it can actually save you money and save you a bunch of time. I'm Tiffany with Boss on a Budget. I teach people how to start nonprofits and how to raise money from the ground up. If you need help with your nonprofit, make sure you subscribe to this channel because I drop videos every week. In this video, I'm going to talk about getting 501c3 status. I'm going to talk about filing tax returns, state taxes, unrelated business income, payroll taxes, tax deductions for your donors, and then finally we're going to talk about losing your tax exempt status and the implications of that. Number 4 comes with a huge warning, so I hope you pay close attention. So let's start with number 1, which is tax exempt status. You don't automatically get 501c3 status just because you create your nonprofit. And this is a lesson I actually had to learn very early on. This is a no judgment zone. You are not expected to know every single thing about starting a nonprofit because why would you? They don't teach this in school. But I thought that if I set up my nonprofit with the state and then better yet, if I got my employer identification number, I thought that once I did that, I was good. I had 501c3 status and I actually helped my church start a nonprofit and thought I was good. This was way back in grad school, so this was a long time ago. But eventually I learned after doing more research that there's a separate process for getting 501c3 status. There are layers to it. You become a nonprofit when you set up your nonprofit at the state level. That is the very first step when you complete your articles of incorporation. If you need help understanding that, I did a video about the articles. That's one step. Then yes, you get your EIN. I just recorded a video about that. But then you have to apply using the 1023 or the 1023 EZ form. Once you go through that process, then you are tax exempt from federal income tax. And we're going to talk about the differences because I'm using certain language in particular to make sure you understand. Number 2 is about your tax returns. Just because you are a nonprofit and you are exempt from paying income tax to the IRS does not mean that you don't file any tax returns or you don't file tax paperwork. As a nonprofit, you still have to file a 990 form. There are 3 versions of that form. There's the 990N, which is referred to as the postcard. There's the 990EZ, and then there's the full 990 form. And you decide which one you're eligible for based on the income that you made in that particular fiscal year. You still have to submit to the IRS information about your nonprofit, even if you're not submitting taxes to them. Why? Because they want to make sure that you still qualify as being tax exempt. So those forms are designed to get regular information from you so they can assess and make sure that they made the right decision and that nothing has changed about your tax exempt status. So even if you did not raise any money in the year, the IRS still wants to get a 990 form from you. A lot of people are mistaken about this because they're like, well, why do I have to submit anything? I put my nonprofit on pause. I didn't really do anything. Why do I have to submit a form? You still have to do it because if you don't submit information to the IRS, they have no idea what's going on. They don't know if you're still a nonprofit, if you dissolved, what's going on with you. So you do have to provide updates. And the main way to do that with the IRS is through that 990 form. You know the deadline for this form because it's 5 months and 15 days after the end of your fiscal year. You know the end of your fiscal year is because that's what you told the IRS. You told the IRS what your fiscal year was when you applied for tax exempt status. So just make sure you understand your deadlines and understand which form you're supposed to submit every single year. Number 3, your state has taxes too. So just because you're a 501c3 organization, you are exempt from paying federal income tax. You still may have to pay some kind of tax at the state level. There are different kinds of taxes, right? There are sales tax requirements in certain states. You may have to pay property tax, and there's still state income tax. Now, for a lot of states, if you have 501c3 status, you are automatically exempt from state income tax. So you don't have to pay taxes on the money that you make through your nonprofit at the state level, but you need to make sure if it's automatic or not. You may have to submit a form to get that exemption. So you just need to be aware of the processes in your state. Every state is different. Also, if you own property as a nonprofit, which is completely acceptable to do and completely legal, you may have to pay property tax, but there may be an exemption where you don't have to pay property tax because you're a nonprofit, or there's a discount on property tax because of that. For your sales tax, which a lot of people get mixed up between sales tax and income tax. So with your sales tax, when you go in a store and you purchase something, or you purchase something from a business in your state, they normally put sales tax on that. I know not every state charges sales tax, and then every state has a different, percentage for their sales tax, but that's a tax that you pay as well. And sometimes if you have 501c3 status, you can get an exemption and you submit your card to that particular vendor or business and they won't charge you sales tax. But all of those are different things. So you can't make assumptions that just because you are approved by the IRS, that covers everything. You still need to do your research and make sure that you're crossing your T's, dotting your I's when it comes to taxes at the state level. Number 4 is about unrelated business income, sometimes referred to as UBI, or you may hear it as unrelated business income tax, UBIT. So just because you're a federally exempt organization does not mean that you may not ever have to pay tax on your income. Did you know that? Well, sometimes you may engage in an activity that's not related to your charitable purpose. Well, the IRS sees that as, well, that's not why you were created. You're doing something separate, so we're going to tax you for it. So I know you didn't think they were going to let you get away with that, right? So if you're making over $1,000 in unrelated business income, you need to report that in a separate schedule along with your 990 every year, because the IRS wants to know what you're doing that's not related to your exempt purpose. And if you're doing it at a level or at a percentage that they deem too high, right, is distracting from your charitable purpose, then you really are at risk of losing your tax exempt status. And again, you still have to pay income tax on that income. You're not exempt from that. Like, you still have to pay something to the IRS if you're doing something that's unrelated to your charitable purpose. One example of this may be you are a mentoring nonprofit. You mentor young people, but you come across an opportunity where you have land and you decide to rent the land out for people to store RVs. This is really random, but it might be possible, right? Because you have land, you can't develop it yet. So you create a structure where you're charging people to store their space on your land. That is not related to your mission in any way possible. That's completely separate. So you have to report that income and you have to pay tax on whatever income you generate from that activity. And again, if you're carrying out that activity at a level that is overshadowing your mission, then that really does put you at risk of losing your status. So this is the one that I said early in the video comes with a warning. You just need to make sure if you're going to do something like this, first of all, consult an accountant that has experience with nonprofit taxes and make sure you review all the IRS documentation. There is a guide on unrelated business income tax that you can refer to, and I'm going to link that below. Number 5, payroll tax still applies. So this is the one that would trip me up when I was younger too, because when I heard the word tax, I just assumed that if you were exempt from taxes, that meant everything. But there are so many different types of taxes that you have to be aware of. So payroll tax, what I'm referring to is if you have employees that work for your nonprofit, so people who are W-2 employees, they get a W-2 at the end of the year, then you are responsible for taking out their share of taxes from the income they make. You also have to pay your own share of the money that you're paying them. And then you also have to pay for things like Social Security and Medicare. And then depending on your state, you may have to pay some unemployment tax and all those things. So it's usually a percentage of a person's income that's taken out an equal amount in every paycheck. Those are taxes that you're still responsible for. You are not exempt from paying those. So when it comes to churches are a little different. So in this video, I'm really talking about direct service nonprofits, not churches. But I'll just say some churches do not have to pay payroll taxes for pastors if they elect not to have those payroll taxes taken out for them, but they still have to submit that themselves, right? So that's different. I'm talking generally about direct service nonprofits. If you're paying somebody, you should be prepared to take out taxes and remit them to the IRS and to the state. And if you do not, you will have a lot of penalties and have a lot of issues with your state tax office and with the IRS. So just be aware of payroll taxes, and there are services that will complete your payroll for you and take care of submitting taxes on your behalf. One payroll company that I use is Gusto. If you want a link to try out Gusto, I'm putting my link down below. I do get a benefit from you clicking on that link and signing up for the service. I do want to disclose that, but I use Gusto personally for my business, and I've been using them for about 2-3 years now. Number 6 is around tax deductions for your donors. So people just assume if they give to a nonprofit, they can write it off, but that's not necessarily the case. And this is when this comes up. So have you ever been to an event and instead of them saying there's like a cover charge charge, they're saying, well, provide a donation in order to participate in the event. It may be like a dinner, or it may even be some kind of gala, and people are like, well, just give a donation, right? That's a way for some people to kind of get around some of the rules. But let me just be clear that a donation means that nobody's getting anything of value in exchange for that. But the reality is, if a person is enjoying something or getting something by participating in that event, they are getting some value from that donation. So it's not just a clear, straight up donation. Sometimes people will get like a gift for donating. Well, depending on the value of that gift and depending on what it is, that's something of value that people have to subtract from the actual amount that they donated. Now, this is a situation where the donor has to figure this out. Like, you can't advise a donor what to do on their personal taxes. But remember, when you are providing donation receipts, I want you to look at some of the language on there. Some of the language or the standard language on those receipts say that this person did not get anything in exchange for this donation. But if they did, then you have to make sure that that person knows to subtract that amount from what they're trying to write off. So the point of this is just to say, just because somebody donates to you isn't as cut and dried as you may think. And just be careful if you're providing a gift or something in exchange for what somebody donates, because technically it's not a donation if somebody's getting something in return. And finally, tax-exempt status is not guaranteed forever and ever and ever, and you can lose your tax-exempt status. Now, the thing about 501c3 status is pretty straightforward. Like, there's not too many things that you need to understand about maintaining your status. You can't campaign for political candidates. You can't set up the organization to benefit an individual person or individual group of people. You can't do a substantial amount of lobbying under your 501c3, and you got to make sure that you operate within your charitable purpose. Like, the rules around 501c3 are pretty straightforward, but I think people will take those for granted and just assume that once they have their status, that they keep their status. First of all, let me just say this. If you are not filling out your 990 form every year, you are absolutely at risk for them taking your status. If you do that 3 years in a row because maybe you're on a break or you're not working on it right now because life is just lifing, if you're not submitting that form, they're going to revoke your status. So if you haven't submitted your form, check on the IRS website, because they do send letters when they do this, but you may not even realize that you don't have your status anymore. But also, if you're doing certain things that jeopardize your charitable purpose, remember, the whole reason why you exist is to fulfill your mission, which is tied to your charitable purpose. And if you start straying from that, then you absolutely risk your tax-exempt status. And you need to assess each year and make sure that you're staying on track with that. And if it needs to be updated, then do that, right? But just make sure you are aligned with that purpose. And that is one of the key duties of your board of directors. That's why you have a board. Part of their duties is loyalty to the organization, and it's loyalty to the organization's mission and making sure that you are fulfilling your mission. So don't take tax-exempt status for granted. Make sure you're submitting your forms. Make sure you're assessing whether or not you're still operating correctly. That's part of the board. That's part of having good governance to make sure you don't lose it. Which one of these things surprised you the most? Let me know in the comments below. And if you have questions, ask away. If you need help with your nonprofit, make sure you visit me at bossonabudget.com. I have resources there for you. Some free, some have a cost, but they will help you in your startup journey. Thank you so much for watching, and I will see you in the next video.